Pfizer shares are gaining this morning, up nearly 5% after beating earnings estimates on the top and bottom line. The company raising its full-year earnings guidance. Joining us now is BMO Managing Director and Head of Healthcare Research, David Seigerman. Thank you for being here, David. So they hiked their forecast despite President Trump's calls to lower drug prices, as well as tariffs on pharmaceuticals imported into the country, potentially more tariffs to come. Do you think these policies are variables that could ultimately change that outlook?
Well, first of all, I think Pfizer typically has pretty conservative guidance at the beginning of the year. Remember, a few years ago, they had to cut their guidance. They don't want to do that again. So I am encouraged with the progress that we're seeing in the first half of the year. Of course, raising earnings raising full-year earnings is great. And I think that they are factoring in these potential tariffs. Obviously not good for the sector, but I think they're managing them well.
What were some of the key drivers in the quarter from their drug assortment that helped lead to some of the revenue growth that we saw? And what were some of the detractors that concern you?
Well, first of all, they are doing a really good job at expense management. That's one of the key initiatives by CFO Dave Denton. He really believed that the expense base was too great to support the revenue base that they had. So he's done a really good job of cutting expenses. And beyond that, key products like Vyndaqel, Eliquis, Padcev, some of their main growth drivers are also doing very well. So that really creates a great setup in the back half of the year.
On the flip side, we have Vertex, which said it wouldn't move its pain treatment into further testing. Was this a surprise to you? The market seems like it is.
This was a surprise, and looking at the reaction, we are actually in the red for the year. It was one of the best performers in biopharma. I think a lot of investors had hoped that they were going to build on their currently approved asset, Jornavix, in the pain space, but this phase 2 trial really didn't show any efficacy, and it's a kind of back to the drawing board to figure out what's next in their pain portfolio.
Yeah, that's what I was going to ask, kind of what does happen next, and particularly as it pertains to pain management.
Right. Well, they are selling a drug called Jornavix in the acute pain space. They do still have a trial going on with this next-gen asset. But when we spoke to management yesterday, they are looking at earlier development products to potentially move those forward. But there was a lot of question marks just around, what's next. And unfortunately, I think that's what's driving the reaction. You have uncertainty from management, and, that uncertainty spooks the market.
David, just coming back to, the Pfizer, Merck kind of setup here, the market's treating these as kind of runoff business. It's like 8 times earnings. Are people just afraid of the fact that earnings power is going to be, lower persistently in the future, or is there actually a value opportunity here?
Well, I think when you look at Merck, for example, you have a big LOE with the Keytruda franchise. That's a potentially $30 billion franchise that's going to have biosimilar competition by the end of the decade. So that's a big issue. We don't have assets that are going to replace that and allow them to grow. When it comes to Pfizer, they have similar issues with LOEs from Eliquis, Xtandi, Xeljanz, for example. It's more of a death by 5 cuts versus 1, but they still need to invest and create new assets and grow them to grow the business. And that's where the concern is coming from.
Yeah, Evan, I mean, you look at 20 years of Pfizer and you get nothing in terms of the performance of the stock price.
Right.
They spent a lot of money on Seagen. What are we seeing there, or what are our expectations in terms of perhaps contributing to that growth you're talking about?
Well, I think Padcev is a really interesting growth asset. Back when they acquired it, there was some really good bladder data. They're leaning into that. We've actually been a little disappointed, to be honest, with Seagen. There's a lot of interesting assets, but when I ask them about what's really important, aside from Padcev, I don't get a clear answer. So we're waiting to see what that looks like. And yes, that is a bit of criticism, and I'd love to really understand what's exciting them more and for them to be more clear.
Yeah, certainly a dynamic space these days. Evan, thanks for joining us today.